well. Hang on a minute. I've got an audio on here. Uh, let's just close. We've just got too many audios on here. Just bear with me a sec. Let's get rid of that one. Okay. Hopefully you can hear me nice and clear. My screen share is going up. Just get the screen up. So if I share screen, on that one on, that one on, that one on, and we want what's my screen share? 12. There we go. Why is it not? That's because it's like. Nope. Why is it not working? There we are. I think that's. There we are. Okay. That's a bit of an echo. Hopefully you can hear me. Okay. Why is that two echoes on? Check the audio. That's great. I had that loop before, but hopefully you can still hear me. Okay. Just three. Right, I hope you can hear me. Right, so Friday wrap up, and it's only me that can hear the stars. Right, Mary had a little no, that one. So let's put that one back on. Turn that one off. Not turn that one up. Leave them both on. For some reason we got glitch this morning, this afternoon. So we have, we've had GDP that missed this morning. New chancellor admitted it's a bit of a problem. Obviously, she's just done her first budget. Uh, the new things were swimmingly going swimmingly with the UK economy, so they've taken a procedure to try and get the economy growing. The outgoing Tory government, focusing on inflation. Inflation was coming down, tracking down quite nicely. Things looked like they were taking off. Lots of pressure on the former prime minister to delay the election. He decided to go in summer, and had one of the worst defeats ever. So we'll see how it all goes from here. As far as sterling's concerned, this morning, where's my sterling? That's euro. Let's quick have a look at sterling. We've been chopping around. So the data came out here around there we go. That's the data there at 7 o'clock or 9 o'clock here on my time. Sorry, 7 o'clock. What am I talking about? We were up here and we sunk, we bounced a bit, and then we found a low here at 126.50 against the dollar. I'm not sure that's picking up. Against the dollar, we've rallied 50 pips since then, but we've topped at 127.97. So 127 we couldn't get to 126.96, and we're back to 126.76 in the month through sort of a pivot area of the day and the sort of 50% of yesterday's. If we've got a little fib on for yesterday, you can see that was we're around about that 50% level right now of where we are from yesterday. It was not all of yesterday. It's just about all of you. Yeah, that's the high and low of yesterday. So that's our range going forward today. So back pivoting through that area where we've been before. Euro currently is on the bid. So just before I came live, we marked the lows and highs of the day. 105.93. So again, just shy of the key 106. Didn't want to get to 105. Sort of we said yesterday and earlier in the week, we had a brief, literally brief break uh, of that yesterday. Uh, as we went under 105 into 105, but then we rallied quite strongly. 106 is still within striking distance. We've got an immediate turnaround from that. Let's see what the retail sales look like. So just quickly back to the calendar. I say weak numbers out of the UK generally. This is a bit of a surprise. The year on year quarterly rise. But the monthly was a bit disappointing for September, so we see how it all pans out as the months roll out, and we ran up the we now await the retail sales figure. Retail sales used to be a very significant part of the economic data of the month. It's lost its significance over the years. It's been moved to a Friday. It used to be on a Tuesday, the beginning of the month. So we'll see what it looks like. Uh, Also coming out in a few minutes is the Empire State Manufacturing Index. Remember, manufacturing accounts for a very small flat part of the GDP, the economic uh, um, uh, 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 sorry, the size of the US economy these days, and generally developed economies. Um, However, it has a hugely significant sentimental issue because companies and countries like making things. We like seem to be producing stuff, whether it's big things like cars or high tech stuff like computers and chips and mobile phones. So it's still a very, very significant thing, and especially with the new president in the US, he was very much a defender of making stuff in the United States, so MAGA, Make America Great Again, America First policy. So that remains quite a key sentimental index. The problem with the Empire State and the Richmond and the Philadelphia Philly Fed index is it's very volatile. It can chop around very, very significantly. You see, it was a massive -12 last time, or significant minus. So it's supposed to ground back for October for the November reading later on. Well, same 5 minutes when we get it. So the impact it has on markets is can be quite minimal. So, but anyway, it's I say it's one of those things that people still keep an eye on, and that's really it as far as the data. We've got some industrial data later on in the day as well, but the key thing we've had this week and yesterday, in particular, I was talking about yesterday, wasn't I? Was the speeches by the central bankers. Bailey's was very bullish, but the key one, Powell yesterday talked about or cooled expectations of a December rate cut quite significantly. So we've seen the weaker dollar today, and we'll have a look at that. We'll go back to the chart and see how dollars come down, particularly against the yen. I know some of you were looking at the yen earlier on our Discord channels, and we were having a chat about dollar yen. On my 4 year, I've got a little chart here I can't share with you, but the 4 year, 4 hour big down moves on pound yen. Dollar yen also uh, big move down. It's flipped a wee bit. Still hasn't triggered a short on the 4 hour, but yeah, dollar coming off its highs against the yen so far today. So yeah, Powell cool expectations for a rate cut. We've obviously got Lagarde saying the opposite. So we've got this policy diversion. The ECB continue to cut. Not clear from what Bailey said last night. If Sterling is going to continue, or they're going to continue with their rate cuts immediately as well. But we'll wrap up the week as well at the end of this our little session here today and see where we are. It's been a very, very significant week, hasn't it? I hope you've made some pips and you got some pounds in and dollars and euros, or whatever your currency is, in the bag for the weekend. So anyway, let's go back to the euros. So the euros couldn't quite get. We spiked to this 106 zone, but we're still bid here. This is the 10-minute chart on the euro dollar. Sterling we saw earlier. Let's have a look at gold. This is gold on the 10-minute chart as well. Our low this morning has been at 255.45.28, so just under the 255. Uh, and I put this in earlier, but since we started speaking, we've spiked to 25.75. So again, uh, excuse me, gold uh, uh, buys to the upside on the back of the sort of the weaker, generally weaker dollar so far today, following Powell's comments last night. So where are we? We are just 3 minutes to go. So if anybody wants to look at a particular asset, please let me know. Let me actually take the logo off because you can't. Right. There we are. You can't see the logo there with our logo up there. Uh, there where there's a gold chart having tested 25.75 up here. So again, buys to the upside since during the European session, so about 6 o'clock this morning here my time. We've been sort of triggering up, and same with euro, looping higher today, so that remains bid. That's just crossed here on that MACD strategy there, so that would have triggered a long. So that's gone long there. In the meantime, we've come back to that. So let's just follow through. Let's place that, shall we? Or we wait. Let's wait for the news to break. We're into that 2 minutes before the news. So will we test 106 from the retail and the Empire State? We'll see. And or will we? Let's get rid of that. That's the order panel. Actually, I'll leave the order panel. I'll get rid of the trades panel and markets panel. There we go. So now, so again, sort of bias to the upside here. Anything else anybody wants to have a look at? Please let me know. Let's have a look. Is anybody in the chat box? Make sure there is today. No. Okay. Index is somebody says anyway. Let's go to markets panel. Let's just have a look at what the index did yesterday. We were down yesterday into close, very flat to be honest. On Wednesday, and then yesterday we lost 36 points on the S&P 500 as the indexes. There we are. Where's my S&P? So from 5930 at the moment. There's yesterday's decline. We followed, so we were down into close yesterday, and we've been down again today, and we bottomed at 5,909, so above the key round 5,900. So far ahead of the market open, and here on the 10-minute chart, that one, as you can see, that one, let me just put that vertical line in there, that one triggered there. It's been up, out, there, and got back in there, and there's been up, and it's having a bit of a wobble on the data. So let's have a quick scan of the data. So we've got where's not tasted. Oh, it's got all the so it's not saving that changes. So let's go everybody on here now. So let's quickly bring this up. So we have on Friday. That's the UK data. It's got everybody's data. So manufacturing index, a big jump, much better than expected, 31.2. Retail sales has slipped quite significantly. It could be obviously the impact of the hurricanes quite significantly, but it's worse than expected. But last month was upgraded, so it's still a really positive spin on that from many. 4% for the month, that's better than expected. And the export price I was looking at was not and one across the board. So it's certainly the Empire State's one to have a look at, and the October month one tick better than expected. Previous month was as an upgrade, quite significant upgrade there from point 0.4 to point 0.8 of 1%. Um, volatile uh, uh, factors again stronger 1.28. That's could again impacted the two pair of uh, dual hurricanes that hit, but the core number disappointed, worse than expected. So let's have a look at where's that's moved. That gold move. So gold has rejected its high of the day and has come down significantly ahead of the data, and then it's come down as the data's broken now. So that's crossed here again. That would have triggered short here actually. Didn't say that, did we, on that strategy? See that what's happened there? But uh, the K line and D line diverted. So if you would have, it would have triggered. The system would have triggered. Sorry, wouldn't have triggered there. It would have triggered there on that candle. So it would have gone short there, stop loss up there, and that would have moving down on that data. Stock market, S&P 500. Not many who don't trade the stock market, but it's reacted relatively negatively as well. Let's have a look at the euros doing if we go back to not that one, not that one. So off, of course, off the night. If we go back to the um, and there we go. So dollars bid that spike to 106 has been rejected. So that's I mean, it's a significant move down. Again, as with all trading strategies, the 10-minute candle is yet to complete. The 5-minute candle, on the other hand, would have completed. So 5-minute traders using that, that's just about to complete. Patience is key. So we'll see if it rejects this level that it's moved down to. It's moved down to 105.60. Obviously, it's again midway, soon midway between yesterday's range that we're talking about and today's. Sorry, midway between today's range now, and that was yesterday's range here, much more volatile. So, not bias to the upside. So, um, yeah, so I've got there's some sort of audio clash at the moment. I'm sorry about that. If you can, sorry, there we are. Um, yeah, I don't know what's gone on today. There seems to be I've got an echo in my ear as well, so I can hear myself, which is very disconcerting. But I hope it's not impacting your trading too much. Um, so yeah, so it's quite as you can see here, quite a significant retrace. You put that probably is our range for the day now, given that that's the major news. The market tried to push it higher before the data came out, and look what we. Sorry, this is one of the reasons I love Fibonacci. There we are. We stalled at the 50% retrace of the day. So many uh, pundits, trying to pre-guess what's going on. It's a bit of obviously it's a bit of a high risk before the data's actually come out. May have had a short set at the high as it spiked up here before the data came out. Here you can see here it's 20 minutes before the data came out, and then we went sideways. So there could have been some shorts triggered at 106 or just shy of 106 that hasn't been triggered. But as you can see, this 5-minute candle is just completed now, so that we've got a flip on the parabolic star, we've got a cross on the MACD, and that's that would following that pattern on that day, you take the short at that point. However, obviously, the key thing is it's already moved to the key fib level, so you might want your target perhaps at the next fib level here, 105.49. And as you said yesterday, that was a pivot area and a big round number again, 105.49.40, so it's 150. So we'll see if that plays out and this strategy continues to play to the downside. But obviously, this is a very short-term time frame on the 5-minute chart. Gold we were looking at earlier, weren't we? Again, similar volatility here. And let's go back to the 5-minute trading on that news Python. So there we are. There's the 5 minutes before. There's the 5 minutes during the trade. Again, we've got a similar. See, we got a similar sort of fib range for the day. The blue is our high, and this blue is our low for the day. You can see we've come back. Oops, there we are. We come back to the 50 fib level for the day. It's held, and now we're bouncing off that. So this strategy though would have still taken you short. So let's see if there's a bit of a retrace and see how that plays now. If we're going to go back to test the highs or back to test lows, and honestly, nobody knows. So don't if people telling you where it's going to go, they're they don't. So, but I say this strategy would have taken you short on this short time frame, but it's a risk of trading the news. Obviously, you get the volatility of the day. As you can see here, the biggest candles of the day because of this is the major news, and we've got this chopping about, which always happens on the news anyway. So you got to be careful. And some people sort of say, "Well, why can't we trade the news? What's it?" Well, it's only a remember with us, you've only got a 4-minute window where it keeps you out. It keeps you away from the risk. So you want to wait. My approach to always trading the news has always been about wait till they clear if the direction is still in place. So today, for instance, let's just use this chart here. So if that's the beginning of the day, so let's put a horizontal line so we'll see where the day is. We'll do that. There we are. So if this is the beginning of the day, we've been sort of sideways, we've been down, and then we've rallied, haven't we? We've rallied from the low of the day. And again, this doesn't matter what asset we're talking about. This is, assets all respond similarly. So this happens to be gold. So we've been chopping about. We moved down to a low. The low was just as the European traders here at 6:30. We're just starting to get to the desks, and we rallied into 8 o'clock. We rallied into 9 o'clock. Middle of the morning here, 10, 11 o'clock UK time. Things were sort of pivoting through this 250-60 area. Rallied again, retraced, rallied again, higher the day before the data, and then the reaction of the data is to wipe out 50% of this rally from 6 o'clock. So some of the guys that were buying down here might have called it as this is retraced here on the news and taken out there. So as I'm saying, this is suggesting a short still. However, we're out of the money if we're taking the short on here at the moment. It's going back to this pivot area, which is our 60. I've done that wrong. No, did that the wrong way around, didn't I? Yeah. So there you are, 60. Yeah, it's the wrong way around. That fib from there to there. Yeah, but there we are. Let's get rid of the previous one. Change that one. Yeah, that was. There we are. Let me just put that fib level on there. There we are. That's that one I had, but that was some reason I had to set that the wrong way around. But there we go. So there we are. There we are. Yeah, we had replaced the 50. We bounced off the 50. The 61 was also tested in the immediate, and we're starting to move up. So let's see where we go from here. But as I say, as far as this MACD parabolic star strategy, that's still short, even though we're out of the money at the moment. So, be patient as ever. So, euro, see if the euro has come back as well. Um, let's just move that out of the way and make that chart a bit bigger. There we are. So the same level, rallying higher all day. Again, similar reaction to the 50 fib level, and then bounced off. However, this the crossing MACD and parabolic SAR still remain short, although a little bit out of the money. So we see how all that pans out. Um, Impact on crypto. Let's have a look at our crypto. Um, mm, Bitcoin's doing continue to rally. It's shy of 90,000 again this morning. So I haven't actually looked at this today. Um, but there we go. We put in just over 90,000 again this morning. And again, what a great week it's had. I've just got the daily time frame on this one. Let me just reset the market. So obviously, as we said earlier in the week and last week, huge rally since the election. Uh, we've put in a new all-time high at 93,700 plus, and we're holding around the 90,000 level today. So that remains very much big holders still holding. And interestingly, since huge the spike on the 5th and 6th, the big leg up we had on the 11th of on Monday, and since then. Interestingly, we're consolidating at high. So here on a end of day basis, 87,000 is becoming a key little support level this week as we go into the weekend. So just shy of that 86,800 perhaps support level there, but 87 is in round number terms is been our support really this week on an end of day basis. So watch that. Obviously going into the weekend, will we test this new all-time high again? Again, time will tell. But as far as this week's concerned, it's been very bullish again for Bitcoin. This is Monday's big rally. So Monday, Tuesday, Wednesday, Thursday, Friday. Obviously, trades all week. So there's no wrap up to it. So at the moment, 87,000 is our big support area. Let's just go back through the other major currencies. Sorry, across it. I'm just going to look at the pairs. So dollar yen. I know again, a lot of you were talking about this, but again, on a daily basis, this remains again very well bid ahead of the election, no doubt. Here into November, we've bid again. It's 156 on a intraday basis, appears to be. Um, a bit of resistance on. So we've got a down day today, but overall, again, another strong week for dollar yen. And again, so what was a resistance area here through this 153.50 zone from the previous week, the end of October. So this is becoming a key support. That was my indicators gone. Put that through that little want a horizontal rate is what I'm looking for. There we are. So you can see here, that was it. There's a, so the one I'm looking for, 53, 53, 50 is what I'm looking for. Through there. Okay, so this is a bit of a resistance zone. First test was rejected here, we've been down, been up, resisted, rejected again, and then broke through this week. So it's a positive week still for the dollar, one of its best weeks, although we're giving up a wee bit today. As you see, a lot of the yen crosses coming off today. If we look at just go back to the hourly chart on this, or the 4 hourly one, see what a sort of a shakeout the dollar's had this uh, so far today. But again, it's still relatively well bid and holding this 155.35 area. But that's a key zone here through the 150 here, the 154 um, zone on the 4 hour chart. But again, this one's triggered a short position in the 4 hour time frame on that last big down candle. Look at the size of the candles again here on this 4 hour time frame on dollar yen. But I said it still looks relatively positive, although we've got a flip on the parabolic saw and the MACD is crossed. So 4 hour trade using this strategy would have gone short here this morning as that has concluded. But let's see how the week concludes. Sterling cable being under pressure, the stronger dollar. Let's go to the daily time frame to wrap this one up. Let's get rid of remove that a little intraday one. So again, it's been a much stronger dollar, a weaker sterling this week, and we've continued to unwind from this holding area around about the 130 ahead of the inflection post the election, and then we've declined significantly last week in the close, and again this week the data come out with the GDP, we've had the jobs numbers, we had the earnings numbers. So sterling down to this level 126. Sorry, this 126.5 area, which we were last at the end or the beginning of August, and that rally we had during the end of the summer, which took us up to 134 plus. So into a key zone area which found support. If I zoom this up, you see it found support as a key zone through here as well in the early part of the summer, and the rally here at the end of April, beginning of May. So we're into a key little pivot area as far as cable is concerned. So will this decline continue next week, or will we see some sort of resilience? Obviously, with Powell's comments and Bailey's comments combined, the market is still selling cable. So pound is now into its consecutive. It's what's this? It's 1, 2, 3, 4, 5, 6, and 6 consecutive day to the downside. Big cross here on the daily time frame on Monday here as we went down, and again it looked like we were consolidating last week and the week before post the election, but it's been a weak week for sterling as we move to the downside. As far as next week is concerned, this key zone needs to hold 126 becomes a key level. As you can see here in the summer, we didn't want to go below 126, so maybe some tentative buys as we go into next week for cable around 126. Euro, on the other hand, as this, and again, it's all to do with the divergence in policy between the Fed now and what Powell said yesterday and what Bailey and Lagarde had to say. So here you can see, let me just get rid of these intraday, remove these settings. And this has been going on for a while, hasn't it? Through October, it looked like a bit of a rally before the election. There's the fifth, and again, big move now, weaker move for the euro. So the key 105 level we talked about this week has been held this week, but tested. But again, 5-6 consecutive days lower. We're up today, as we've just seen, but 105 becomes key, and there's 106. Can we get back to it again? A bit like the cable chart, we haven't been down to these areas this time beyond the summer. This was back in April, 15th of April, where again we found buys at 106. But if we just scroll further back, it's a long while. In fact, yeah, into last year before we got to this 105 zone where we did see some significant buyers, but it took a while, didn't it? And off we go. So 106 is key next week for euro, but clearly, if Mr. Lagarde continues to talk about continue to cut rates, so if the data continues to look under pressure from particularly the German data, euros under pressure. And obviously, if 105 breaches, I've seen some articles already this week talking about if you take this up to the weekly chart, obviously the chatter starts talking about parity again. Obviously, 105 needs to be breached quite significantly. But it's it can't be ruled out again. Here's the weekly chart. There's that 105 level, as you can see. Um, we rallied through it very quickly when we went back up. So it's a big psychological and technical support area for the euro. But we've had in that weekly chart two significant down weeks thanks to the Trump election and expected policy announcements from the new government in the United States. But yeah, very much 105, 106 range for euro next week. Right. As I've got no more questions, I don't know if Dawn, you're still here or to look at something else. I don't know if the audio is driving you mad as much as it is driving me because I'm here myself in the earpiece. I'm going to wrap this up. It's been here 40 minutes and I don't know what's I'll have to check the feeds for that today, but I've had enough hearing myself stereo. So, guys, have a great weekend. Stay safe. Let me leave you with the stock market. I didn't do the stock markets, didn't I? Um, S&P 500. Let me just got the daily. That's the weekly. You see that's still big. We've had a down week so far this week, but remains um, very much. There we are. Zoom that in. So the all-time highs we saw 6,000 breached this week. Huge lines in the sand. 5,000 was a massive target, and still remains big. Interestingly, on my daily time frame, the Nasdaq triggered a short earlier this week. Was it yesterday or the day before? I can't remember now. Let me just check on the daily chart. It was it last night or the night before? Yeah, S&P suggesting Nasdaq. Yeah, 2 days ago, Nasdaq just triggered a short on this close here on this strategy, not this area on this strategy, but probably a crossing moving average strategy. There you go. Nasdaq. Oh, it's on the 10-minute. Got the daily. So the 21. That's the 21 moving average. That's still holding, but it did close on the 9-period EMA here for the first time in a week or so. So a bit of a rounding top, which is not great. But again, I mean, as you can see, it's still very much it's had a very good rally the stock market. But so on an end of day basis, short triggered last night. It's currently in the money. We'd have to break the 21 here at 20,600 for this to significantly unwind to the downside. Okay. See with gold, everyone's favorite asset, and we're now where are we? It's the 5 minute. We were saying we crossed here, so we've gone up back to the 23, and that's been rejected. And we're now back under the 38, the 50 fib level of the initial news is still providing support, but this, I say, this strategy has been short from there. We stop us up there, so see how that all pans out. So it's still short and it's still out of the money if we'd got in on the conclusion of this one, wasn't it? So we're out of the money at the moment, but it's not as bad as it was. So it's gold here, still short. on the 5-minute time frame. So have a great weekend, everyone, and we'll see you all next week. Quite a week next week. Let's have a quick look at the calendar for. Let me just take off. Theory me. So we do for next week, and filters. I just want the high impact event. I don't want all these countries on. I'll have to fix that. But, so next week, a bit of a quiet week. So we got. Sorry, should be next week before. So quite a week next week. We've got much quieter week. Initial claim for the major high impact event. Uh, European inflation data on Tuesday, um, and read the weekly claims on Thursday. The only thing that jump out of there, German GDP on Friday. So quite a week ahead of obviously the following week, which takes us into Thanksgiving, which will be quite again curtailed week. Thursday is obviously closed in the United States, and Friday is very, very quiet. It's only half day as well. So much quieter week next week compared to this week. But there's opportunities, always opportunities. Don't forget our. Let's go back to our website. Don't forget our latest. Oops, um, our latest challenges. Latest opportunities. That's my current demo account. I should just get there. Let's just take you to the website. Sorry. Too many sites open. And we've got our uh, challenges available, and we got our discounts available as well. So check out those 30% discount at the moment. So you can obviously start from $55. Remember, there's currently 30% off that. Any questions? Stick some questions in the chat box, and we're happy to help you. But get started from $55, and at the moment we've got 30% off that, so it's less than $40, $38.50. So come and join us, give it a go. We're here to help. Okay, always manage your risk. That's the key to all good traders. And pick your challenges accordingly. Okay, whether you want quick express phase or the two-phase step where you got higher. So this is the express. Obviously, you got a 12% profit target. The standard has a 10% and then only 0.5% on the second, so it filters out. So whatever style of trader you are, there's an opportunity for you. So do take care, and the very best.